Hi everybody, Jeff Yasteen here. By the way, if you're not following my YouTube posts already, make sure to subscribe to my YouTube channel and keep following me on social media. Now, if you want to come out of the COVID-19 crisis with your portfolio intact and to be positioned for further gains, you need to buy strength. And I have one such strong stock in mind right now. Ironically, it's a company whose founder I interviewed back in my days as a financial journalist. The company that we now call Thermo Fisher Scientific, the symbol is TMO, was originally named Thermo Electron. It was founded by a man named George Hatsopoulos in the late 1950s. And by the time I interviewed him in the 1990s as a correspondent and anchor for PBS Nightly Business Report, Thermo was a powerhouse company that was leading the fight against a different virus, HIV, by developing faster, more highly automated diagnostic testing equipment. What I remember most about the interview was Hatsopoulos' brilliance as well as his humble nature. Now, much has changed since then. Hatsopoulos retired in 1999. The company merged with Fisher Scientific in 2006. But the company continues to play a leading role in the fight against COVID-19. And thanks to the panic sell-off of recent weeks, investors can now buy this reliably growing stock at a much more reasonable valuation again. In mid-March, Thermo Fisher Scientific received emergency authorization from the FDA for its COVID-19 diagnostic test. The CEO, Mark Casper, told CNBC recently the company would immediately start shipping out the first batches of 1.5 million kits, which can be administered at a doctor's office or one of those drive-up testing centers. The firm aims to ramp up production of 5 million tests a week in April. Now, the way I see it, the COVID-19 tests are really just the start of why the stock deserves a closer look from investors. Now, for one, Thermo Fisher Scientific, which makes scientific and diagnostic equipment, as well as chemical reagents that are used up in labs in the course of all this research, this is a company that's already hitting on all cylinders. It earned $12.32 a share in profits for 2019, and despite the interruptions from COVID-19, it should earn at least $13.37 a share this year, rising to nearly $15 a share in 2021. And after the panic selling of recent weeks, basically its price earnings ratio based on those 2021 profits has dropped all the way back down to 18. Now, that's a rare undervaluation for a company known for its reliable, steady growth and usually trades at much higher PE levels. Now, presuming the stock moves up to its more historic PE level of around 25 or 30 for its near-term earnings, that basically makes Thermo Fisher Scientific a $380 stock by sometime late next year. 18 to 24 months is my bet on this one. But there's another reason for owning the shares beyond the COVID-19 diagnostic system. The company recently landed a whale of a biotech acquisition with the $11.5 billion purchase of Europe's QIAGEN. QIAGEN is a maker of molecular diagnostic tools and applied testing technology. Now, QIAGEN has also been on the forefront of COVID-19 rapid testing. The company began shipping its own set of diagnostic testing kits in February and followed up in late March with what it calls the first syndromic test for the virus as well. Now, this deal, which was announced at the beginning of March, already has the blessing of Wall Street analysts, and it's one more tool for Thermo Fisher Scientific and its arsenal of weapons against COVID-19 and viruses like it, and it is generating hefty profits for its shareholders both now and in the future. I'm Jeff Yasteen, wishing you the best of goodbyes.